I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Senate control at stake. The two Senate runoff elections are drawing to a close in Georgia. We will have the latest, plus how social media is policing misinformation about the races, which is running rampant online. Plus, chip off the old block. Qualcomm says President Cristiano Amon will take over when CEO Steve Mollenkopf retires. We will talk about the company's strategy going forward as the chip industry undergoes some massive shifts, with Apple upsetting the cart and making more chips of its own. And going long on Amazon. Citron Research reaps a 155% gain on short seller Andrew Leff's big bets in 2020. What does he have his eye on this year? We will ask him. All of those stories in a moment, but first, U.S. stocks rising today amid those key elections happening right now in Georgia, about to draw to a close. Bloomberg's Ed Ludlow has a look at how that shaped the day in trading, even though volume was thin. Ed, walk us through the day.
That's right, Emily. The S&P 500 closing up 0.7%, rebounding from its worst start to a year since 2016. On Monday, some of the gains driven by energy stocks. We've seen oil rising on Tuesday, but also technology stocks. The Nasdaq 100 index up by 0.8%. The biggest driver in terms of points being Apple, up 1.25%. You can see there also rebounding because Apple, in points terms, was one of the biggest laggards. Biggest points decliners on Monday. I'm also taking a look at Bitcoin, up, you can see there, by 0.4%, but at one point near $34,000. JP Morgan analysts out with a note today saying that Bitcoin could rise as much as $146,000 in the long term, as it mimics gold, as investors look at Bitcoin as an asset class in comparison to gold. We also had some deal news. Bloomberg News reporting the EV startup Rivian raising billions of dollars, sources say, at a potential value of around $25 billion. Of course, Rivian, a major potential rival to Tesla. Rivian says it will bring its electric pickup to market by June of this year to U.S. customers. We know that Tesla hopes to have its Cybertruck pickup on U.S. roads by the end of this year. It's backed by big names like BlackRock, by T. Rowe Price, Amazon, and Ford. And then we also got some breaking news, Emily, after the market closed on Tuesday. The New York Stock Exchange is reconsidering its decision to halt the delisting of 3 major Chinese telecoms companies. You remember that they U-turned on that decision after consulting with regulatory bodies. But according to sources after the market closed today, they are now reconsidering to go back to their original decision, which is to go ahead and delist those 3 major Chinese telecom companies, according to sources.
Right, and of course, that was on the back of an executive order by President Trump. Treasury Secretary Steven Mnuchin told the NYSE today he disagreed with their reversal earlier, so we'll stay tuned for what happens there. I want to talk about chips, though, Ed, because lots of big moves. Qualcomm ending the day up more than 2.5%, announcing that Cristiano Amon, the president, will be taking over for Steve Mollenkopf as he retires as CEO, which was a fairly unexpected move. Mollenkopf still fairly young. What kind of reaction did we see in the market?
Yeah, I think Wall Street expects business as normal to continue, given that Cristiano Amon is a long-time servant, long-time engineer at Qualcomm. Stephen Mollenkopf himself saying that he knew his decision to retire would be seen as early in any event, given his age, and that the company is in a good place. But he said it's because it's in a good place that he feels ready to move on. Elsewhere, we got news from Micron. It's raised by Citi from a sell to a buy, up 2 notches. Lots of confidence that DRAM sales will rebound and that Micron will be a big beneficiary of that. We also saw its price target raised by both Deutsche Bank and RBC Capital Markets. So on the whole, the Philadelphia Semiconductor Index, the SOX, is continuing on in 2021 very much as it left off last year, which is to outperform major indices, including the S&P 500.
All right, Ed Ludlow, thanks so much for that update. We're going to talk a little bit more about the chip sector and what's happening with Qualcomm later in the show. Meantime, polls closing in Georgia in just under 2 hours, 7 p.m. Eastern time. Election observers reporting Voting is going smoothly in today's Senate runoffs. We already know there have been a record number of early voters, and like the general election, it'll take a while to learn the results. Joining us now to talk about how the day has gone, Bloomberg's Emily Wilkins, who is on the ground for us in Atlanta. So, Emily, look, from all accounts, it seems like it's been a smooth day despite the tumult and controversy leading up to this election. What is the latest from your point of view?
So, Emily, you're right. It has been a smooth day, but that doesn't mean that we're going to know who the winner is tonight. There are a ton of absentee ballots to be counted, and that counting cannot begin until polls close at 7 p.m. So we're hearing that we could get the results as early as tomorrow morning. It might take a couple days. Remember, it took 10 days for us to find out the votes in the general election. We don't expect that to take quite that long, but we're not expecting to know tonight which two senators will be going on to the U.S. Senate.
Meantime, what about the backdrop? Trump versus Biden. A judge has once again rejected the president's bid to decertify the election results. How is that playing into what's happening today?
You know, news like this kind of feels like Groundhog Day. The Trump campaign has brought lawsuit after lawsuit, case after case to the courts, and the courts, Democrat and Republican judges have dismissed them, have debunked them, and yet that really hasn't changed the fact that President Trump is still alleging that there was fraud in the November 3rd election. He's still pushing conspiracy theories, as we heard last night. And talking to Georgian Republicans on the ground, a lot of them do believe that there was fraud. They do agree with the president on this. So the fact that the lawsuit got dismissed today, the phone call that the president had with Georgia's Secretary of State, it's really unclear at this point exactly how much it's going to factor into the election.
So talk to us about the process for the rest of the night. You know, as we've talked about the presidential election, the counting took days. Have they reformed the process? Is there any way to make it go a little faster, knowing that once again, a huge chunk of those votes have already come in early, but again, they won't start counting them until polls are closed?
Right, so we're thinking that most of the more than 3 million votes that arrived early were probably from Democrats. And so it's sort of this weird thing, whereas we're looking for the turnout today. If the turnout is low, that actually bodes well for Democrats because it means that a lot of people voted early. If a ton of people voted today, that actually bodes better for Republicans. I'm here at the event for Republicans in Georgia, for Kelly Loeffler and David Perdue. Although we're not expecting Mr. Perdue to come tonight, he has been in quarantine since he came into contact with someone who tested positive for COVID. The Democrats aren't really holding a big event tonight. I think that speaks both to the caution that they've had about the coronavirus and the fact that we're probably just not going to know tonight definitively who the winner is.
And what is the latest you are hearing from the Biden campaign about their level of confidence tonight?
So Biden gave a big rally yesterday. I think it had several hundred cars showed up, lots of honking, lots of enthusiasm there. Democrats have been pushing hard in this election, just like Republicans. And Biden's message was that this is about control of the Senate. And he tried to relate that specifically to Georgians. He brought up those $2,000 individual stimulus checks that weren't able to pass through Congress. He said that if Georgians wanted to see those checks, they needed to make sure that they elected Democrats to the Senate today.
All right, Bloomberg's Emily Wilkins on the ground in Atlanta, where it is all happening. We're all anxiously awaiting those results. Emily, thanks so much for your reporting. All right, coming up, longtime Qualcomm CEO Steve Mollenkopf announces he is stepping down from the chip maker in June. What's behind the move and how does his replacement stack up? That is next. This is Bloomberg. A change is coming at the top of Qualcomm. Steve Mollenkopf will retire in June after more than 7 years as CEO of one of the world's largest chip makers that power smartphones. He spoke to reporters, including our own Ian King, about the timing of the move.
No matter when I retire, it's going to seem early to people. So what's the right way to do it? And my view was the right way to do it was do it when the company is in a very, very strong position at a natural stopping point. And the mistake would be to go too long.
President Cristiano Amon will become the company's next CEO. Joining us now to discuss, our reporter Ian King, who has been covering the chip industry for decades. And Ian, interesting how he answered that question there. It certainly does seem early, though if it had been a few more years or in a few more years' time, then maybe people wouldn't be talking about how early it is that he's retiring. He's a fairly young CEO. Why do you think he's stepping down now?
Yeah, no, I mean, that was the question I think everybody had when they saw this announcement this morning. He's 52 years old, which is not particularly ancient for a CEO, as you obviously know. He seemed sincere. I mean, he faced a lot of questions on that point, but he seemed sincere. He said, look, I've been through this tumultuous period. I've brought the company to the point where I think it needs to be. And, I want to go and do other things with my life, things that I haven't been able to do as a 24/7 CEO. Said he has no other plans, which seemed to be a denial that he's about to move somewhere else. So, you have to take what he said at face value, that, he wants to live his own life a bit more fully, free of being, the burden of being the top guy at a tech company.
Let's talk about the big picture, which you know so well, though. Obviously other companies are making big moves in chips. AMD, for example. Apple is making more of its own chips, and Qualcomm has been a huge Apple customer. I mean, do you think there's any sort of truth to the idea that perhaps they just want fresh blood or a new strategy?
Well, I mean, to be fair to Malenkov, his strategy to get them out of all of the legal problems, to get them out of all of the customer relationship difficulties that they had was, look, let's just run faster than anybody else can. Let's make our chips just simply better than anybody else can make them for themselves, and so that they have to come to us. And that's actually played out at least in the initial stages of 5G. What his successor, Cristiano Amon, is saying is like, look, we need to take that strategy and go beyond smartphones. We can't just rely on them. Plenty of competition there, as everybody knows. We need to get into automotive. We need to get into networking. We need to get into IoT. And that, and also PCs, where he's going to take on Intel and AMD. And that's the strategy there, I think, that we'll see whether Qualcomm becomes more than just a company that's done really well in smartphones and lives and dies according to the smartphone cycle.
Now, Cristiano Amon has been on this show several times. I know you speak with him frequently. Tell us a little bit more about what he's like and how his leadership style may differ from his predecessor.
Well, I think, Emily, what the answer to that is, having spoken with him yourself several times. He's clearly, at least externally, very different to his predecessor. Malenkov was criticized for being too sort of sang-froid amidst all of the problems that Qualcomm had. Cristiano is very much heart on his sleeve, talks, 20 to the dozen, very, very passionate, very expressive. And, how that plays internally, who can say? Obviously, I think a lot of people are motivated by that energy, and obviously he's done well at the company, and they've placed this faith in him.
So what are some key potential milestones or, changes in tact or strategy that you will be looking for after he takes over to sort of figure out how he's going to lead this company?
Yeah, again, that's a very good question. I mean, I asked him how we should judge him, and he said basically, well, my mandate is not to screw up. But I think what investors will be looking for is like, this year is going to be a very good year growth-wise because initial phase of 5G, Qualcomm's doing well there. After that, though, growth is scheduled to sort of cool off considerably compared to, according to analyst estimates. And I think what people would like to see from Qualcomm is that period of sustained growth that comes from other markets, that, it can really prove that its technology has a play in all of these other markets, and it becomes more than just that, that smartphone-dependent company.
Well, there you hear more of Cristiano's more expressive style, as you point out in his answer to your question about not screwing up. Of course, we will be following, as will you. Bloomberg's Ian King who covers chips for us. Thank you. Now, in other company leadership news, IBM has named Gary Cohn, a former top economic advisor to President Trump and former Goldman Sachs executive, as vice chair. Cohn will work with IBM's chief executive officer, Arvind Krishna, on, quote, a wide range of business initiatives and external engagement, including areas of business development, client services, public advocacy, and client relationship management. Krishna was named CEO nearly a year ago as former CEO Ginni Rometty announced she would step down and eventually retire. We're going to hear from her in a special edition of Bloomberg Studio 1.0 coming up next Friday right here on Bloomberg Television, her last interview as chair of IBM. Stay tuned. Coming up, a booming market for U.S. IPOs showing no sign of slowing down in 2021 after the blockbuster debuts of Airbnb and DoorDash last month. We're going to take a look at what lies ahead this year next. This is Bloomberg. As we mentioned earlier, Bloomberg has learned that the New York Stock Exchange is now reconsidering its decision to halt the delisting of 3 major Chinese telecom firms after Treasury Secretary Steven Mnuchin told the big board he opposed its announcement to grant the companies a reprieve. The exchange first announced it would delist those companies on New Year's Eve to comply with President Trump's executive order, which bars American investments in China-based firms that are affiliated with the military. The exchange then changed course Monday when it became unclear whether the firms were actually being banned, according to our sources. The New York Stock Exchange and Treasury spokespeople have declined to comment, but we will keep following. Well, Affirm and Bumble are among the tech companies kickstarting 2021 with preparations to make their long-awaited market debuts. After a remarkable 2020 with $180 billion raised from companies going public in the U.S., markets are now awaiting the next leg of another record IPO run. But will it look anything like last year? Joining us to discuss, Mark Lehman, JMP Securities CEO. Mark, will it look like last year, this year?
Well, it's rare to see 2 years look exactly alike. I think they will be equally robust. I think they're going to look a little bit different, but it's going to be a very interesting time. There'll be different components. But I think having such a strong 2020 is a good backdrop for 2021. The markets shook off yesterday already, and the VIX came down a little bit today. I think we're going to have a very interesting first quarter. There'll be some that test the market very rapidly. Watch how those get received. If they get received well, I think you're going to have a terrific 21.
We're looking for Affirm, for example, to raise potentially $1 billion. That's what they're targeting in their IPO, which we're expecting to happen sometime in the next few weeks. That one was scheduled for the end of last year, but got pushed. Talk to us about the companies that you are watching. Presumably it sounds like you think the IPO window is still wide open.
Yeah, I mean, we saw a great year last year, particularly in tech and healthcare. We saw a lot both on the IPO side in the traditional sense and on the SPAC side. And I would expect that to be similar in 2021. I think the backdrop of such great success for some of the tech IPOs probably has some companies thinking about accessing the public markets sooner, given how well received they were. And the SPAC receptivity, I think, is also a good sign and harbinger for 21. What you're also going to see is those companies now need to buy companies. So those are almost re-IPOs because you're usually raising some capital. So it's like a second bite of the apple. So I would expect healthcare and tech to dominate in early 21. And you're going to see, again, some of those examples right away in the first month or two. And I'd expect that to be well received and be a harbinger again for 21's outperformance like we saw last year in that marketplace.
Do you think these outperformances, though, will keep up? I mean, you look at a company like Airbnb and DoorDash, companies that more than doubled on their first day of trading. Do you think they're going to be able to keep up that momentum, or were they just wildly mispriced?
A couple things. I think there is a hysteria in the IPO market because people missed a lot of the great IPOs of 2019 and before that. They think they missed Peloton, they missed Zoom. I could name a dozen, Carvana, Cloudflare, on and on and on. They missed it. So they didn't want to be, there's a lot of FOMO in some of those people. So maybe they bid up the prices of those stocks materially. Those companies, now that they're public, have to perform. We saw companies that were very well received the year before, like Lyft and Uber, who had a hard time getting back to those first day prices and still have had a hard time, that doesn't mean they won't be great public companies. So let's watch those names. But I think that those sectors are still the hottest sectors that work from home, that explosive market in healthcare where we saw a vaccine be created in less than a year. That's going to be really good for healthcare. We got an IPO market that's going to be receptive. We also have a conference next week that won't quite look like the historical JP Morgan conference where you have 2,000 people descending on San Francisco. But next week is healthcare week for a lot of Wall Street. Let's watch the healthcare market to see where there's some receptivity. There's some great private companies that are going to access the public markets and access capital this year. And that's where I'd be paying attention.
Right, the JP Morgan Healthcare Conference, one we will definitely be following as well. I definitely want to get your take on this New York Stock Exchange controversy, saying they're going to delist these Chinese telecoms, then backtracking, then saying they are reconsidering. Of course, we're in the waning days of the Trump administration. You know, does the uncertainty stop when he leaves office, or do you see continued tension between the U.S. and China and possibly confusion?
Yes to everything. I think, yes, we have 2 weeks left in the Trump administration, and January 20th will be a momentous day for the country, and it'll be a momentous day for the future of both the country and the markets. I think there will be continued pressure on China. I think Trump did open up a dialogue about what China has done for our markets and what they've done for cyber and some other things globally that we are not going to lose because we lose the president. We have a new president. There is certainly concern about the Chinese and what they are doing. And that's not going to abate on January 21st. In fact, I think it'll accelerate because a lot of what we should be paying attention to has been de-emphasized, frankly, by the Trump administration. So I expect that to continue. I think the last chapter hasn't been written, so don't pay attention to the next 2 weeks. I think you pay attention to what the Trump administration leaves and what the Biden administration starts. And I think there'll be continued focus on China and some of the issues that surround the relationship between the two countries.
All right, JMP Securities CEO Mark Lehman, appreciate your thoughts. We'll be watching to see if your predictions ring true. Thanks so much. Okay, coming up, as the pandemic swept the globe, Amazon came out on top. Can the momentum continue? We're talking with one investor who bet big on the e-commerce giant in March. We will speak with him next. This is Bloomberg.
This is Bloomberg Technology. I'm Mark Crumpton in New York. My colleague Emily Chang will be with us in just a few moments. We will take a look at some of the stock market activity for this day. The top story that was affecting the markets and leading our news today were the special elections that are being held in Georgia. 2 U.S. Senate seats are there. Wall Street is keeping an eye out for Main Street with Goldman Sachs. An interview with the CEO, David Solomon. He's urging additional government aid for small businesses across the United States. He spoke earlier with my colleague Shonali Bassick in Washington. Have a listen.
Small businesses are such a vitally important part of our economy, and they're so important in terms of how they employ, take care of families, contribute to the communities that we all live and operate in. And they've been so badly hit, so badly affected by the pandemic, and they need help. And some help has come, but more help is needed. And so one of the things we're trying to do by picketing here on the Hill is to let Congress know there are a number of things that small businesses still need help and support on to get to the other side. They can see the light at the end of the tunnel, but they need some help, to get through the tunnel and get to the other side.
Now, a lot of this is about stimulus, and Joe Biden himself has called the current package a down payment. So what is the David Solomon plan? What would you say is needed in terms of the amount needed to save this economy?
So one of the things that we've done over the course of the last few months, given that we have over 10,000 businesses, small businesses that have been through our program over the course of the last decade, is we've gone out, we've surveyed them, and we've talked to them. And we've created something called 10,000 Small Businesses Voices, which is really an advocacy platform. And we've asked them, what do you need help with? And if you look at these placards that are here on the lawn, they raise a number of issues that the small businesses are saying, hey, we need help with this. And I'd highlight 3 of them to you that I think are very, very important. The first is they need access to capital. They need capital to bridge them through this challenging period of time. And something like the Restart Act, I think, is a good way to get at that. Second, they talk about the need to support the people who work for them, particularly around healthcare. And healthcare costs are just so prohibitive, often they're not in a position to take care of the healthcare issues that their employees have. And so they need some way to create better incentives to provide healthcare support for their employees. And third, because people are working harder, given the challenges they face, they need more help with childcare and just basic support so they can be present at work, but also make sure that their children are taken care of, while they're working and trying to keep their businesses afloat.
So all of this is happening as unemployment still remains very elevated. And it's even worse for Black Americans, even worse for Hispanic Americans and Asian Americans. What do you think on day one is going to be Joe Biden's toughest task in fixing that gap?
Well, the toughest task that the new administration has is continuing to march forward to make progress on getting the vaccines distributed so we can get to the other side of the virus. There's going to be a lot of discussion about what additional stimulus is needed. We've raised a bunch of issues here this morning where we're trying to get people focused on things that we think needs to be included in any additional stimulus that's brought forward. But I think the big focus right now is we've got to get people vaccinated. We've got to get to the other side of the virus.
Well, a lot of the market had been reacting to this vaccine hope, but the rollout has been so slow so far, and it's drawn a lot of concerns. How is that impacting your own plans, and how is that impacting the plans of your clients?
Well, I think there's still a lot of uncertainty, and there's no question that the supply of vaccine is growing. In fact, I'm very encouraged by the amount of vaccine that's out there, but we have to find more flexible, nimble, more efficient ways to get that vaccine distributed. And I'm hopeful that in addition to the state actions that are being taken around the country, potentially will allow the private sector to help with plans to get this vaccine distributed. There's plenty of vaccine. We have to create increased speed and efficiency in getting that vaccine to people who are in need, especially vulnerable people and frontline workers who need the support right now.
Do you think it's moving fast enough that you'll be able to bring Goldman Sachs employees back in full by the end of the year?
I certainly would expect that we'll have Goldman Sachs employees back in full by the end of the year. We will get through this, and I'm really hopeful that over the course of the next 6 months, we see a real improvement, but there's still work to be done. And once we deal with the vaccine and the virus and people feel safe, we're still going to have to deal with the economic consequence of the shutdowns and the impact on our economy that this pandemic's had. And that, I think, will be a bumpier, longer period of time.
Goldman Sachs Chair and CEO David Solomon there. And just to note, Mike Bloomberg, the founder and majority owner of Bloomberg LP, parent company of this network, is a co-chair of the Goldman Sachs 10,000 Small Businesses Advisory Council. Meantime, as the pandemic hit the United States and headlines pivoted to death tolls and hospitalizations, many saw doomsday as imminent. The stock market tanked as lockdowns hit businesses across the country. However, Andrew Left, founder at the famed short seller Citron Research, saw an opportunity and bet big on e-commerce giant Amazon, saying if we continue to stay at home, Amazon is a huge winner. If everything goes back to normal, Amazon will still be a big winner. Joining me now to talk about his call and what he sees for the company going forward is Andrew Left himself. Andrew, thank you so much for joining us. So your firm returned more than 200% gross last year, including that big bet on Amazon. What did you get right?
The stay at home. What I looked for, well, first of all, with Amazon, it's easy now we forget how it was back in March when we thought if we got the virus, we were going to die. Everyone was sitting at home and it was Armageddon on television and everything was going on. So at the time, even though there were plenty of stocks that were great values down 60 or 70%, if the end of the world's coming, it seemed like the end of the world. I figured Amazon seemed something safe, seemed like a logistics for just the world, for the government. If we had to just get drugs to people, that was where I wanted to be. And if we all got back in 2-3 weeks and it was over, I still wanted to be in Amazon. So it was actually more of a reaction to what do I buy? Oh my God, I'll just go buy some Amazon. It seems safe for me. In hindsight, I could have bought Etsy and got a higher return on Etsy. I just wasn't thinking forward ahead with face masks. But then if you look at the state
Etsy did have a remarkable year.
a
Yeah,
monster.
I was going to ask, what about some of the other stay-at-home names that I know there are some stay-at-home names that you say weren't getting enough attention?
Well, the initial reaction was everyone bought Peloton and everyone bought Wayfair. But then after you saw those moves, you could have bought Nautilus, which gave a higher return. Then you could have bought RH, which actually benefited also from the stay-at-home and the de-urbanization movement. And then as we moved into the summertime, under the summer lockdown, you realize, oh my God, RH is the leader in outdoor furniture. So you could have kept with that theme. I looked around my house immediately, thinking, okay, what can I buy? What can I buy? Sonos, aha. And they saw as people were buying, as Netflix was going higher, people watching more Netflix, they're going to watch it with their Sonos. The Sonos had a great suite of offerings that came out. Sonos was a double. From the summertime, it was a double. So if you paid attention and looked around, there was more than the obvious Zoom, Peloton, stay-at-home stocks.
Okay, so Amazon, will you be continuing to ride that wave this year? They just had a, fairly high-profile failure closing down their healthcare venture with JP Morgan and Berkshire Hathaway. Is that a concern?
That's a tic-tac. The company still has so much runway to go. They went on both sides, AWS, and they went on the GMV in the future. That's no doubt. The only thing that could hurt them is them or the government, actually. So why not? Still, they have a long way to go. And I'm sure one day we'll wake up and maybe they'll decide to split the stock and we'll get an extra 10% that day. Maybe. So yeah, Amazon just seems to be, it's one that I'm comfortable with. Buying it. If the market corrects, I'll buy lower.
So let's talk about where you're going to be placing your bets for this year and what kind of a year you think it will be. What do you got your money on?
So I'm pretty balanced right now. I'm actually probably have put on more short exposure in the past few weeks than I've had in the past few months. And that's just because you've seen a complete saturation of the names. Obviously, without giving any specific names, all these SPACs, some are going to be zeros. They just are. And just, it's funny, I heard with your last guest, not Solomon, before that, you're talking about IPOs, and you mentioned Peloton and another IPO. Well, not all IPOs are the same. Not all SPACs are the same. So just because people missed out on the IPO market, I think it'll be a stock picker's market. Look for those specific names that got carried away that maybe don't have moats as great as we thought they did, or can't grow their businesses the way the street has expected them to, that got these unnatural, artificial bumps from 2020. So I want to be short those names, and I want to be long names that just are defensible names.
What about Bitcoin? I believe you are bullish. There are folks out there saying it's moving in on gold. I had a guest yesterday, Sunny Singh of BitPay, saying he thinks it's going to get to 45,000 in less than a month. What do you think?
I mean, why not? Let's put it this. I recommended Bitcoin. I bought MicroStrategy at around 210. I recommended it publicly. I think it's like 400 and something right now. That was a month ago. It's not like a stock. They can't do a secondary, so they can't just start issuing more Bitcoin with selling shareholders. I mean, who knows how much Bitcoin is actually in the float, how much is actually lost. I think if every person with a high net worth actually put a little bit of their net worth in Bitcoin and just decided to sit on it, it should just start gapping higher, higher, and higher. Now I've limited my exposure in Bitcoin because when I bought it, anything that goes up so fast, it's the natural trader instinct in me to take some off. And it is a black box. So you don't know if a 5% holder like a stock would be selling it. You don't see that in Bitcoin. So whenever something is that type of black box, I'll be exposed to it because I think it's going higher. Completely matters of perception. Forget about the underlying fiat currency, value, not value to it. Will it ever be used? I don't think it'll ever be used as a currency. It's an alternative asset. But just on the perceived value, it seems to go higher. So anyone who puts 100,000, 200,000, that's guessing. That's just pure speculation because there's no inherent or intrinsic value.
So what are your boldest predictions for the year? I mean, for example, do you think there's going to be or could be a big tech crash?
I think
a bubble burst?
There could be. And it's not a tech crash. If tech doesn't grow as fast, I think you'll see some of the retail investors spooked out. Retail is pretty much addicted. They're junkies for that quick, fast movement. Whereas, some of the bigger tech funds can wait a year or 2 years till it plays out or understand there might be some stagnation in the markets. So things that are very heavily retail owned. I'm short Peloton right now again. And you could say, left, you were short earlier this year. You're wrong. Yes, I was wrong. I was early. They loved it. Apple just launched Apple Fitness Plus recently. It's an amazing product. Tim Cook says we just can't stop raving about what Apple has in the pipeline in fitness. And I think it's going to really disrupt the growth. So you can't look at Peloton at 145 the way you looked at it at 45. It's a whole different stock.
All right. Andrew Left, founder of Citron Research. Andrew, I know a lot of folks follow what you have to say, so thanks so much for taking the time. We'll be watching to see whether your bets pay off just as much this year. All right, coming up, as Andrew just talked about, the importance of e-commerce and Amazon amidst the pandemic. What can we expect in 2021? We're going to hear from a retail veteran next. This is Bloomberg. While experts have said the shift to e-commerce in 2020 is here to stay, it is impossible to truly see what lies over the horizon. Despite optimism about vaccines, the resurgence of COVID cases around the world, and the spread of a new strain of the virus mean the future of retail in 2021 is difficult to predict yet again. Joining us now to discuss, Mary Epter, co-founder of Reagent NYC, a retail consultancy. Mary, you've worked at places like Macy's and Saks and have spent many, many years examining the retail industry. What do you think this year holds?
Well, I think that what we saw is that the modern digital consumer has changed how we view retail. We don't look at department stores and say there's a driver anymore. That's really something of the past. COVID was an accelerator of the behavior change, not necessarily the stimulus, but the changes that we've seen, we think are here mostly to stay. And we saw that there was really a dynamic relationship among the consumer, the content he or she was seeking, and the trends they were sharing, coupled with what the market had to offer. So some changes, but we saw it all gearing to more e-commerce and really a further stray away from the former type of retail, namely department stores.
So we were just talking to Andrew Left, a short seller who, made a lot of money betting big on Amazon last year. He says he's going to continue to go long on Amazon this year. Is that the right call?
It's absolutely the right call. We partner with an AI firm, Surge AI, and they really provide a lot of the data, real-time data looking forward versus backward. And we were able to note a lot of trends before they happened and before a lot of people saw them from that data. And so one of the things that we saw was that Amazon is really the new department store. It's not Macy's, it's not JCPenney. And I think as soon as we realize that Amazon is the new department store, Etsy is one of them, Wayfair is one of them, and maybe arguably eBay is one of them. It's not the ones that we grew up with, not implying you, but me, what I grew up with in the business. And so I think that it's going to continue to change and evolve. And so, yes, I think he's absolutely right on. Now, there are some risks down the road depending on what happens this year, but I don't see Amazon going away anytime soon. The one thing I would say is that Walmart really created their marketplace to compete with Amazon. And they got that, they understood it. That's why Walmart, Target could really adapt to this COVID time and make it really big because they understood that even in advance. And so they just flourished. And a lot of other stores have not.
What are the risks down the road that you see?
So number one is we have a new administration coming in. And so obviously there may be some new regulations on the tech industry, with the Facebooks and the Googles and so on. So we see that is a risk. We don't know exactly what that will be, but there could be an impact on the digital players. And then there's going to be a rebound of in-person shopping. Maybe the consumer doesn't want to buy everything online. We don't think for a lot of the basics and the sundries and things like that, that people will go back to buying toothpaste in the stores. But we think that, for all age ranges, we really saw that they've shifted how they're going to do their shopping. So we're going to see maybe a rebound of going back into the stores. And this would be kind of reminiscent of what happened in the Roaring 20s after the flu was cured and so on, everybody wanted to get a little more outrageous. So we could see that happening. And the other thing could be that value-driven shoppers. Excuse me. Go ahead.
Well, I just had one last question about the future of physical retail, because it's easy to say going forward, you know, there will always be sort of some combination of online and offline retail. But that said, do you think this is the beginning of the death of physical retail stores? I know I did get out once over the holidays and got into physical stores, and it was nice to be there. But, you know, they were empty, of course, given what is happening. And I just wonder, what is the future of brick and mortar?
So what I think is, if we keep brick and mortar going the way it has been, no, but it has to mirror more of what the customers have found in an Amazon experience or a Wayfair experience or the others. So we can't go back to the way that, for example, Macy's has always done it. They may have to change. So if you don't offer them something new, I don't think they'll come back. But there is a lot of interest in stores. For example, when I was out and about, I saw some real excitement among sneakers stores with collaborations and different designers and so on. So there is excitement if there's something new and different, but if it's the same old, no, not at all.
All right. Fascinating to see what will be to come. Reagent NYC co-founder Mary Ebner, thanks so much for sharing your insights with us. Okay, still ahead, from the general election in November to today's Senate runoff in Georgia, how Facebook and Twitter are combating voter misinformation and disinformation on their platforms. This is Bloomberg. American Depository Receipts, or ADRs, for Alibaba are moving. They fell to 2% just now on a new report that President Trump has signed an executive order banning transactions with 8 Chinese software apps, including Ant Group's Alipay. This is according to Reuters, citing a senior administration official. The Commerce Department is tasked with defining which transactions will be banned. We are following this story, and we'll bring you updates as we have them. And back to our top story of the day, control of the Senate at stake. Twitter and Facebook are saying they've been preparing for today's closely watched race in Georgia. For more, I want to bring in Rebecca Kern, who's been following the developments for Bloomberg government. So, you know, obviously there have been local misinformation, disinformation campaigns being waged around these elections happening in Georgia. How have Facebook and Twitter been handling this?
So Facebook and Twitter have been really going after these misinformation campaigns and labeling tweets and Facebook posts that spread information that's false, claiming false, a variety of false claims. President Trump has shared a lot that, for example, he won Georgia, and those claims are labeled by Twitter. And so they're just doubling down those efforts. This is a continuation of efforts they started before the November 3rd election and are continuing. So they just are trying to limit the spread of false information that would dissuade voters from even voting and lead to voter suppression as well.
Well, and it's not just what's happening in Georgia that's at stake. There is a new trend in sort of local disinformation as traditional local outlets have suffered. I mean, can Facebook and Twitter keep a handle on all of this, not just in the U.S., but around the world?
It's a big task they have to tackle, and they tell me they have hired hundreds of employees to help with elections management and with fact-checking on their sites this year. And I don't know if it's possible to stop everything, but they are certainly putting in renewed efforts, and we'll see how successful they are at stopping misinformation based on the outcome of tonight's election. polls are closing around 7. So they seem to continue to be labeling at least the president and top officials and campaigns that are spreading misinformation today and false claims. So I've been watching that happen.
All right, and we are waiting for those polls to close. Bloomberg's Rebecca Kern, thank you so much for your reporting there. You can tune in tonight for our special coverage of the Georgia results starting 7 p.m. Eastern time right here on Bloomberg Television and Radio. That does it for this edition of Bloomberg Technology. I'm Emily Chang in San Francisco, Bloomberg Daybreak Asia. Coming up next, this is Bloomberg.